Been an extremely rough year for cryptocurrency, with the 2022 bear market being pretty harsh and causing a number of companies to go under, most notably the FTX exchange, which did go under for a number of reasons, but ultimately it was the downfall of the crypto market that caused the FTX collapse. In this video, we're going to check out Coinbase, Binance, and Kraken, three of the world's biggest exchanges when it comes to cryptocurrency, to understand a little bit about how they make money even in a bear market.
Nothing I say on this channel is financial advice. Always do your own research before investing any of your
money. Let's get into today's video. So first of all, we're going to talk about Coinbase. Now, if you've been in crypto at all, you've probably heard of Coinbase, and you've probably been using Coinbase because it's one of the easiest platforms to get set up on. That's great for crypto because it's great to get new people into the space, because crypto can be quite challenging if you don't know much about it, and Coinbase makes it very easy for users to get involved. Now, Coinbase operates like most exchanges and makes its money in a similar way to many of the other exchanges. A lot of the money that comes onto Coinbase comes through credit card or debit card transactions, and each of those transactions Coinbase will then charge a fee for. For example, if I wanted to buy $100 worth of Bitcoin, it might charge me a couple of dollars for the transaction fee. They then make their money as well on spreads. A spread is effectively a price that they're willing to buy something at and a price that they're willing to sell something at. For example, just to make it very simple, let's talk about apples. If I want to sell an apple for $1 and I'm prepared to buy an apple at 90 cents, that means that I will always make money because I can sell things for a higher price and I can buy them for. So every time I make that little bit of difference, because I'm able to buy something much cheaper than I can sell it for. Now, other things that Coinbase has on its platform, it also offers things like staking. Now, staking has been under the spotlight recently by the SEC because it could potentially cause a bit of an upset if the crypto markets continue to plunge further towards the downside. Now, staking is effectively a way that you lock your liquidity up in a platform. For example, with Ethereum, you might hold, let's say, 30 Ethereum. I then stake that 30 Ethereum for 1 year or 2 years in order to earn a reward as a percentage yield. Now, that's great for me because I can earn a passive percentage yield, but that platform then has access to that crypto that it can then lend out to other parties in order to make profit on that. Now, if you're at all worried about crypto platforms and whether they've been regulated or not to worry, because Coinbase has been regulated and is one of the few that has passed some pretty stringent tests by the SEC and others. Now, the next one we're going to jump across to is Kraken, which is a newer exchange and also runs in a similar way perhaps to Coinbase. Now, Kraken offers 180 different cryptocurrencies, so pretty much any crypto that you've probably heard about on YouTube, you'll be able to come across and find over on Kraken. Now, Kraken makes its money in similar way to Coinbase, obviously taking a bit of money from the spreads, but it also offers other ways to trade in the likes of futures trading. That means I can use leverage. Now, what that might mean, for example, is let's say, to make this easy, that Bitcoin is worth $10,000. I've only got $1,000 to my name. I can come on and use 10x leverage, which means I can then buy an entire Bitcoin. It means if Bitcoin goes up 10%, I double my money because I make 10% and I only had 10% of a Bitcoin in the first place. However, if that goes down and goes against me, then I will lose 10%, and i.e. I will lose all of my money. Futures trading is probably the most profitable way for exchanges to make money because the fees they can charge can be a bit higher because the leveraged quantities are that much bigger, which makes it much easier for individuals to be able to use more money, but also it's highly risky and lots of people do lose money, so don't do it unless you are an experienced trader or at least have spent some time working on a demo account to understand how to trade yourself. Now, over on Kraken again, Kraken makes money from you buying and selling crypto through different spreads, but also from your deposits upon the platform. There's also other things like NFTs and much more over on Kraken. But although not regulated in the US, Kraken is a well-recognized exchange and is trusted by a lot of people. And the last platform today, which is Binance, the world's biggest cryptocurrency exchange. Binance is a favorite trading platform for many people around the world because it offers an enormous range of different currencies. It's not available in the United States, but there is a version called Binance US, although you could still access it using a VPN or a virtual private network. Now, because of the huge range of different tokens, Binance is trusted by lots of different people. Binance themselves make money in similar ways to the other ones with onboarding transactions as well as spreads, and lots of volume in futures trading. They also have an incubator, so new crypto companies coming along can find investment from Binance, but that gives Binance an opportunity to have a stake in those particular companies. Then when those new companies do well, Binance will obviously profit as well. Now, recently we've been through a crypto bear market, and if you don't understand what the term bulls versus bears mean, well, don't worry. Effectively, the bull market is basically a market where the trend moves towards the upside, and a bear market is simply where the trend moves towards the downside. And as you've probably been aware, since around November of 2021, we've been in a bear market where Bitcoin and pretty much the majority of every other cryptocurrency has slid towards the downside. At the end of that, we then move into what's called a crypto winter. And it's called a crypto winter because not much is really happening. The price is not particularly high. Now, if we look into this Bitcoin chart, we can see that since November back in 2021, we have been in this market where we've been moving towards the downside. This is a bear market. Before preceding that, we had a bull market, which does the opposite and moves towards the upside. Once we've had a bear market and the bear market is over, we move into a bit of a section like this where not much is really happening. The price doesn't move much because volumes are low in the market. People are not particularly interested in trading the asset because they think it's going to go to zero. This is called a crypto winter and is probably, in my opinion, the best time to be paying attention to crypto, but unfortunately no one does that. They all get excited and hyped up when the prices are at the top, and ultimately that's not really how you make money in crypto. Once we go through the crypto winter, we then move into a period of uncertainty. Is this the next bull market towards the upside, or is this just a continuation in the bear market, which is what many think? Obviously, now personally I believe that the bear market is over and we are going to start transitioning into a bull market, but obviously go away and do your own research. No one really knows exactly what is going on with crypto or any other market for that matter. But if you want to understand a little bit more about cryptocurrency and how to make money in cryptocurrency, then make sure you subscribe to this channel. As well as that, guys, do me a favor and hit that like button. I will see you in the very next video. Bye-bye.